Good morning. Welcome to Apple Markets. My name is Chris. Today's focus is the live market trading webinar. We take a look at Forex, commodities, and stock indices. First of all, though, before we take a look at the live charts, be aware of this disclaimer. This webinar and later on recording is shown to a global audience, but may not be suitable for everyone. Please visit applemarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar and later on recording is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and live webinar, and you are also aware of the risk involved when trading. Great. So today we're going to take a look at Fibonacci levels. We're going to zoom in and focus on that. But generally speaking, though, even when we're using fibs specifically today, it's always good to keep an account of the trend and momentum. What we above all want to do is not trade against we don't want to use fibs when it's not trending. We don't want to use fibs when it's ranging. Fibs are great when it's trending, specifically when there's momentum. It's great, and that's when we want to use those fib levels. And that would be step 2, using fibs or patterns to look for ways to capitalize on the analysis. Then check if there are any filters. That's step 3. And step 4 is basically using that analysis, all those previous 3 steps, and deciding, okay, this is what I expect. This is the path of least resistance that I think price was going to do. But I want this decision zone to be reached, and I'm looking for a trigger at that spot before trading it. So analysis is one thing, then the trading plan is the next step, and analyzing where do I want to trade it. Does it have a good outlook at that point? Is there good reward to risk? What am I looking for when price gets to the 50 fib, for instance? A candlestick pattern could be something that confirms the bounce at the fib, etc. So this is, the trade details after the analysis. So this week, take a look at the calendar. As always, a lot of speeches from central bank presidents, basically, and governors coming up from a whole list of countries. Otherwise, you got your, other news throughout the week that you want to pay attention to. Some typical news like retail sales, consumer confidence, etc. So take a look at that. You can find it by going to admiralmarkets.com, clicking on, analytics, and then going to calendar here. All right, and besides that, of course, Admiral Markets, you have a lot more to find. The blog, you have the analysis here, you have webinars that you can sign up, obviously, articles, and above all, of course, Better Traded for Supreme Edition with 100+ features. All right, so let me open the chat box. First of all, I want to ask you, before I take a look at the charts, good morning, Edith. Good to see you here. I hope that you had a good short holiday. And I wanted to ask you, who joined yesterday's webinar? Yesterday's webinar was hosted by Admiral Markets Croatia, and Nenad and I were there as well, but it was above all Josip who was explaining his system. Did anyone join? Just out of curiosity, how did you like it? Did you think it was a good system? Is it something for you? Perhaps you like the system, but you realize that it's not for you. That's possible. And if you missed it, Edith missed it, what you can do is take a look at our YouTube channel. We're going to be uploading it today. And you will be able to find and watch the recording. Full length. The whole system is explained. And it generates basically, in the last 1.5 years, with max 2% risk per trade, it's up 109%. Real life accounts, real statement was showed in the webinar, and that's the Josip system. Keeps it very basic and simple, and only uses a fib and price action, basically. So if that's for you, then you want to take a look. It's, of course, it has maybe not as many opportunities as some of you would like. Dogan, for instance, doesn't think it's for him, and that's no problem. But at least you can see how, the equity curve looks like so you get a feeling for that, then at least you always take a bit of information from every webinar, so that's useful. Now, above all, also, besides the webinar, Nanit and I showed that if you start trading with arrow markets, there are some additional benefits here to be received. This is a special package to the end of October. So take a look at that. Here you can see, depending on how much capital you will be trading with when you start an account, when you start a new account, I should say, that does go up, obviously. But generally speaking, you can count on courses, extra discounts, bonuses. The list is quite long, as you can see. This is really the best package that we've ever combined, and we really wanted to make it extra. We're really like thinking deliberately, how can we make it as good as possible so that no one will miss out. We want to make it so special that everyone looks at it like, okay, that's something I do not want to miss out. So that's why we thought, okay, this is a great combination. We'll explain the system and as the starting point, but then kind of add a support package besides that, because the system is one thing, but using it and being effective with it is another. So this is the follow-up basically, and but we can only do that, of course, for traders that are joining us, and obviously otherwise we don't have 500 hours a day, unfortunately, as you can imagine. So yeah, it's a great package here. So I hope that I'm looking forward to it. I'm sure that a lot of traders are going to use it. I hope that that you will be one of those, and you can check that out here. I'll drop the link in the chat box right there, and I also add the YouTube channel so you can check out the basically the webinar itself and see if the system is for you. The system is for anyone to use. You don't have to be trading through us. That was just a gift for everyone, really. But the follow-up, of course, is specifically for those that start with this. All right. Only one trader joined. Any others, by the way? We had a pretty good group yesterday. I think more than 100 joined eventually. So that was good. All right, here we go. Euro-dollar. Daily chart. Sorry, it seems to be, okay. It's a bit slowing down because of the search I was doing for the channel. There you got the channel in the chat box as well. So for those that are looking now at the euro-dollar, we got a couple of days up, and basically we're in a pretty tight consolidation here. Support and resistance, both nearby. We got a break yesterday of this resistance trend line, and we got a small push up to 112.75. So for the moment, I think that if price is able to break later today through support like this, maybe we can draw it maybe from here to here. If it's able to break through this, I think we could get a bigger correction downwards. At this moment, it will probably bounce, I would say, but the question is, will it fail up in here, or will it post one more higher high? If it does post a higher high, I would say 113 is the resistance level that it should turn. So I don't think upside really offers a lot of space. It doesn't offer a lot of opportunity. I think that the upside is very limited before we bump into major resistance at 113. That's where I would expect price to turn and continue with basically the bearish movement that we've had here. So that's where I would expect resistance to kick in, and I would expect price to fall back to the bottom of the triangle. Now we're relatively close to the top of the triangle, as you can see, not right at it. Here we already had two bounces. So I'm looking for another bounce at the same triangle, and basically for a move back to the bottom of that triangle. So the triangle, the fib, both indicating strong confluence, and I would expect a turnaround. I'll be looking for candlestick patterns up in here on the 4-hour chart, 1-hour chart, maybe even daily chart for that turn, and that's it. Now, if it doesn't get up there and it breaks this green trend line, then this might be it. There's divergence here between these tops, as you can see. So Specifically, if it doesn't break today, if it doesn't get up here today, I don't know if that's possible, but let's say it makes a kind of like a correction like this, then I think that there will be a break tomorrow of support and we'll see a breakout like this. If it doesn't get up here today, then basically the price has gone more or less sideways like this. Then a significant number of candles have not been able to break this high, and that looks like failure, that looks like weakness. At the moment, there's 1, 2, 3, fourth candle. So if within the London session, I would say, this top does not get broken, then I think there's a good chance of failure here, and tomorrow I wouldn't be surprised to see the break. Now, the other thing, of course, it could break today. If it doesn't, if it bounces now, hits resistance, fails, and breaks its green line, I think there could be a bearish day today with bearish momentum. The breakout, for instance, the breakout candle, let's say price kind of goes like this. In the beginning of the London session and New York session, start of New York session, we see a candle like this, an hourly candle like that. Boom, I think that's a great breakout candle. I think that would be with a close. The close has to be near the low. I think that's a good signal that the rest of the New York session will be bearish, and probably the start of tomorrow's session too, the London session. Sorry for the cat there in the background. She doesn't agree with this analysis at all. She's absolutely bullish, and I'm bearish, as you can see. So there's a big divergence here. If you heard the cat, by the way, if you don't hear it, then I'm just explaining why you could hear a cat. Yeah, so that's my view. So let's see. I mean, it could bounce. Let's see how it bounces here. If it really starts to push, as I said, it could get to 113. Now, let's zoom out a bit and take a look at the bigger picture. I'm looking at the smaller triangle here, basically. But there's a bigger triangle too. And you'll see that a bit better if I zoom out even more. So if it breaks 113 and there's a daily candle with the close like this, pushing above it, well, then we could, I think, expect the price to continue higher and reach 114.50, 115, which is the top of the bigger triangle. Same is true if it breaks the smaller triangle. If it breaks through 110, then there could be an acceleration down to 107.50, where there's the bottom of the bigger triangle. So before I think we see some, before I expect some bigger up or down, smaller triangle needs to be broken. Smaller triangle needs to be broken, and then we would see the moves to the support or resistance of the bigger triangle. Ultimately, before these bigger triangles get broken, then we need to look at the weekly and need to start thinking about probably even bigger stuff, because this was momentum. There's been a huge consolidation, and considering, of course, the fact that we have a dollar in it, that means that we have to think about the U.S. elections. That's in 6 weeks from now. Will the dollar move a lot before the elections? Probably not. Why? Because the Fed will probably not make any movement before the elections. So I think that at the earliest we can expect a potential rate hike in December after the elections, maybe the first quarter next year. So I think before this euro-dollar triangle breaks, before it probably breaks to the downside, that's my expectation at the moment based on wave analysis and also looking at the fundamentals. I think we're looking at the end of this year at the earliest, but perhaps even first quarter next year. So back to lower time frames. I think that's it. Any questions? How about if it doesn't bounce here? How about if it breaks right here? Well, that's also fine. If it has a hourly candle like that, also, in my opinion, a breakout. So I'm interested in shorting with the breakout here, or if it bounces and then shows a breakout, or if it bounces more impulsively and hits 113 and then shows a pin bar reversal, bullish engulfing candle at 113-ish, 113.10, 113.25 max. And if it does break to the downside, then I would put a fib from here to here probably and start to look for the breakout here. I would start to look for smaller patterns. If it breaks right now, I'll probably look at the 5-minute chart, right, and look for the oscillator. We'll see momentum here. I'll look for the oscillator to retrace back to the zero line and then look for a continuation. So this, add the awesome oscillator. I would look for this to dip, this to return, then look for the pattern after the pattern. So we'll see momentum, we'll see probably a zigzag or some bear flag, and I'll be looking to trade it after this goes back to the zero line. So for those of you who visit this webinar regularly, you know what I'm looking for here. Is there anyone perhaps that does not understand what I'm showing here? Because I don't want to explain it in great detail if everyone is clear on the retracement I'm looking here. If you want to trade it on the hourly, I think it's also perfectly fine just to trade the candle, the hourly candle as well. It's also okay. Depends what you prefer. If you like to be a bit more precise, I think the lower time frames could give a bit more indication of when the correction, the retracement is over. Is it clear? Let's see. Velko. So breakout candle could be the entry or a trigger to zoom in, basically, in my opinion. And then I would expect a bounce to the fibs. I would prefer it to have to break out after the retracement here, because then I think there could be more space for downside. All right, no other questions, so let's move on. Pound USD. All right, in my view, quite interesting. Is this going to be, we got a triangle potential here too. And basically price is retesting this bottom. This bottom needs to break before the triangle is not valid. At this moment, it could be an A, B, C, D still. Or alternatively, the C has ended here, and this is the start of a new downtrend. That all depends how price is responding at the bottom, this support level. So it needs to break through this pink one here before we have triangle invalidated. At the moment, it's stopping at the 88.6 fib and this trend line. I would say it needs to, first of all, before we can consider this to be a wave D, well, I mean, there's always, of course, I mean, anyone who was an early bird and took the 88.6 fib, then you can move to break even and sit out and just hope for a wave D. If not, you got a break even trade. That would have been one way, but that occurred yesterday. So that's now not worth discussing, obviously. If you're not in that trade, the counter trend trade here, then the next opportunity I would think would have to be after this channel break and after it shows a higher low. Then there's space up to the top of the triangle for completion of the wave E. That wave E could finish anywhere, but cannot break above the wave C. So stop loss would have to be above the wave C or above the candlestick pattern where wave E is finished. Wave E can finish anywhere. So in that case, I would need to put a fib from here to here, and anywhere along these fibs, price could stop. But I would expect it to go at least to the 50. I wouldn't expect it to stop earlier than that. That means that effectively, once you break above the channel, this purple channel, and you get a higher low here, there's a good buy opportunity, I think, up to the 50. Then there's also good opportunities to look for bounce trades at any of these four fibs. Could be the turning spot. The 50 is the most likely, and then it decreases in probability because as we go higher in the fib, there's a chance that price will stop at the 50 and turn and not go up anymore, or will stop at the 61 and turn and go up, not go up. Does anyone hear me at the moment? Does the sound okay? Because Verko is saying that there's no sound at the moment. Checking 1, 2, 3. Checking 1, 2, 3. Is the sound okay? Edith says yes. I think that's a yes, like the sound is okay. Sound okay? Maybe please, it's okay. Okay, great. Perfect. So I'm not sure if you missed anything, but I was talking, great, thank you so much. I'm not sure if you missed anything, but I was talking about, yikes, I don't know where to start now, but I was talking about that the wave E should go at least to the 50. So if it breaks, gives a higher low here, that could be a buy opportunity to the 50, but that these fibs are resistance and turning spots and good potential shorts, but that the lower fibs have more probability of getting filled because, as we go higher, the price might not get up to the 78.6 fib, right? It could turn at the 61.8, could not get that high. That's why maybe looking at candlestick patterns at these fibs is the best because then we have a better chance of catching the turn. All right, if it's not turning, it will probably stay in this channel. It will definitely not break above this fib and this high. And what could happen is that basically it depends also how this corrects. If this is looking corrective, then a break like this could also, even if it breaks this channel, could still be good. Because it could break this channel basically in a rising wedge kind of fashion like this. That does not look very impulsive. So want to keep an eye on basically how it corrects as well, which is difficult to see at this moment. We don't have any reading on that. Hang on. So that still remains a question mark actually at this point. Let me get rid of this fib. And let me get rid of this fib. All right. That's still a bit of a question mark. So if it, for instance, makes an impulse like this, but then starts to make a bull flag, well, then I think there's a good chance it's going to make one more upside, make an ABC, and then we'll see a further continuation up to the 50 fib I just mentioned. All right. But if it shows exhaustion, if it makes upside, but then quickly turns down and starts to make a bear flag, then I think it's actually looking much better for a short. In that case, it doesn't matter exactly how the wave count is, but then it looks more bearish, set up for bearish break. All right. So there's also a potential head and shoulders, inverted head and shoulders, something to be aware of. So it really depends on how price is going to move up here, whether I think there's going to be a bigger correction or whether there's going to be a setup for downside. At this moment, I don't see any trades though. Maybe on lower time frames it could be ready for upside. Let's see on a 50-minute chart. Yeah, maybe if this hourly candle, for instance, 55 minutes from now, well, if it breaks this high and it closes up in the Keltner here, breaks through the resistance of that, that looks like a pretty strong candle. And I would expect 1, 2, 3 candles to continue higher, and there could be some momentum to the upside, even if it's just a simple correction. Right, price could get up to these two targets easily. So there's not a lot of space there, so maybe looking for a bit of a pullback of the hourly candle to about halfway, and then there could be a small move up there. But it's really quite a tight space, not much, to work with there. But it could still be worth it because who knows? It could be way more impulsive than these two targets. It can break through the channel. It could fly up all the way to 131, and we don't want to. I don't want to, let's say, be overly precise of what the price could do. what the path of least resistance could be, right? So I don't want to do that either. Be aware though that any longs are reversal trades, risky, and yeah, even if we look at Josep's strategy yesterday, he said look for higher highs and against the trend, and we don't even have that here. We have it here, right? So we could be doing this, I guess, now just because we have the higher high, and price did bounce off the 38.2 fib, but he was looking for 50. So that could be another way, looking for the 50 here, and looking for price to move up to these targets. All right. So that's about it, I guess. Let's see how this hourly candle closes. London open is always a bit volatile, so this 5-minute chart, then again, it could easily fly down here, hit the 50 fib, and start to build in an uptrend. It could easily happen. It doesn't seem like that seems likely now, but it could. So that could happen within this hour. If it doesn't, then the hourly will close pretty strong probably. All right, that's, I think, my entire view at this moment. Dollar yen is bouncing at an 88.6 fib 2 right here, double bottom, big support levels. It's crunch time. Is this the bounce finally, or is it going to break and continue down with the downtrend that we see on the daily chart here? All right, so that basically is the decision time for the dollar yen. Hopefully, finally, because we talked about this already for a while, but it seems like decision time is really getting clear or near to us. All right, so we got bottoms in here. We got to break through that for a move down to the 50 for the 61.8 fib on the weekly chart, which is at 95. That's the break to the downside. If it is the bounce that I'm expecting, then it should finally happen here. Otherwise, it's really starting to look, well, it already is looking like a descending wedge. But if it doesn't significantly bounce here, then the chances, I guess, are definitely decreasing that it will make that upside. And I think the chances of a break to the downside are increasing. Price would need to break above this channel, and there should be then the opportunity for a significant rally there. 4-hour chart, we're getting the bounce. We need a break above this resistance here, like this. Green is not so logical. Let me use a different color. Above this smaller purple line, and then we should see a rally here. But then again, we bump into that daily channel. We've tried to break it several times. It hasn't happened. So this is the crucial question. Can it break above it? What I'm looking for, well, basically daily candle above the daily trend line here. 4-hour candle above this hourly line. And that's it, basically. Alternatively, of course, a daily candle below the daily support for downside. Same stuff as last week. I don't think we're going to get a break right now. It seems like I wouldn't be surprised to get ABC right here, back to support. That could be a risky but lucrative long right there as well, potentially, after it completes. So I'd like to see this finish, make a hook back like this, failure here, and downside. What I would do is put a fib from here to here, wait for this to finish, wait for a bounce, wait for a bounce here then, and then price to go down to these targets. Yes, you got to really be patient with this dollar yen indeed. It's taking its time, and it's not in a hurry. Absolutely. It's one of those moments where you're waiting in line for something, and I don't know, you're in a rush, but everyone in front of you has the time of, I mean, all the time of the world, including the people that are providing the service. Like we were at on a holiday. Well, we were traveling a bit, not a full vacation, but taking some time off. And we were waiting at the pharmacy, and it seemed like I think we were already waiting for 10 minutes, and no, we had a number, ticket number, and no one, after besides the people that were being helped as we entered, no one had been helped after that. And we were like only 3 or 4 people behind that number. So we thought it wouldn't take too long, but it was like 10, 15 minutes later, and no one had, so we thought, okay, forget it. We just left. So yeah, if you're running out of patience with the dollar yen, best is to leave it for the moment. All right, pound yen, this is a descending wedge 2, right at support, and pound dollar is at potential bouncing spot 2. So I need to see dollar yen and pound first to see how they're going to respond before I do anything with the pound yen. Euro yen, basically I think that the euro yen is more of a bouncing spot. There are a couple of things here that I think are important. On a monthly chart, I know it's huge, but on the monthly chart, still there is a bit of a there's a bit of a inverted head and shoulders here potential. Secondly, this downside, the angle of it is weaker than this downside, which typically is more of an ABC than a 1, 2, 3. All right. Thirdly, we hit the target. Fourthly, 2 monthly candles have not broken this low. That has not happened since the down move started here more than a year ago. So those are a lot of compelling arguments why this could be a bouncing spot. But the dollar yen has to move. The yen has to move. Otherwise, the euro yen is not going to move. So is it going to be here? I don't know. It could still make that dash down to the 78.6 fib and then bounce. How much it will bounce, we'll have to see how much the dollar yen moves too. But there are some arguments to say that the bounce could even happen here. So when looking at a weekly, we're seeing some consolidation here. Is price going to break through the consolidation? Then it's going to fall down to the 78.6 fib. Or is it going to bounce here and break? If it does, it needs to break through this downtrend channel, this trend line here, major resistance, this trend line, major resistance. So this one is a steeper angle, of course, that's the first break needed. This one is a weaker angle. That would be the second break needed before we really get the breakouts after the bounce. So let me add a box here. There we go. All right. So yeah, that's basically the situation on the euro yen. I know Caitlin was taking shorts up in here, I guess, somewhere around here, right after the red circle. That was a great job. Excellent work. At the moment, my view is that it looks like this is a triangle at the moment, I would say. I think there's a good chance of a triangle at this point. All right, I think that probably will be building here. I would say probably one more leg to the upside, maybe even one more leg to the downside. Let's see how this breaks, and if it breaks. Eventually it will, of course, but when? At this moment, this downside looks corrective to me. I know we had good strong candles here, but all in all, this looks pretty corrective. And that's why when I was analyzing the euro yen yesterday, I think that at this point, I would not trade it either way. All right, so it could be different though if price manages to complete its correction. Let's say it gets up into these targets somewhere here, for instance, then that could be different for shorting price potential there. Or if it breaks, but then if it breaks, then there's, before you know it, you're already running into this support level and the bottom. So if this purple trend line breaks, there could be some downside, but be aware of 111. and be aware of 110 and 109. Like this. All right, so I think it's waiting for the moment. All right, if there is a good breakout candle here, I would look for on a lower time frame some retracement, and there could be some continuation there. On an hourly chart, I do think there's a good chance of an upside. I mean, looking at the fact that there's been 5 waves here, there's been an ABC correction. I was looking for a bounce here, and whether we get the continuation, of course, now it's at resistance, so a bit of a pullback. Still think there's a good chance of a bounce there rather than a breakout to the downside. So if I had to choose, I'd probably be a bit more bullish, but of course that changes if these fibs and these trend lines break. All right, odd USD. All right, odd USD, yesterday bullish. Basically, I think that it is challenging resistance, and it might break this time. We've had basically a 3-wave correction like this. And that's one of the reasons why I think that the push could succeed now. Because we've had correction, price has found substantial support. If we zoom out just a tad here, like this, of course we see that it's in a pretty big consolidation correction. But eventually those break. And I wouldn't be surprised that now that could be the moment, considering the correction like this and the support that has held. All right, like this. All right, so we're in a triangle, obviously. The triangle is going to break. Question is, will it be now? So it'd be good, if anyone is in this trade, it'd be good to keep an eye on these candles, these daily candles, and basically just even trail stop these lows. Anyone who took the bullish candle, for instance, at the close or the retracement, I think it just put easily the stop loss below the low here. And then tomorrow, if this candle closes below that low, and probably most lows, I would say. All right, so let's see how this daily candle closes. If this is anywhere like this, I think that's a good continuation signal. I still favor the upside break, considering the fact that this basically, I think, is an ABC correction. This was momentum, and I think that this could be the C part. All right, so from that point of view, that's another supporting factor. Let's see, on the hourly chart, we had basically a bull flag, the break of the bull flag, hook back, and continuation. All right, so it is something that actually Edith was asking me about yesterday, and she was actually looking for upside. That was her analysis, and she was also looking at the support at the moving averages and was looking for potential entry. So I'm just curious, Edith, did you take the bullish candle yesterday by any chance? This one here, or was it too small for you? It was bullish. It didn't engulf the last one, so I guess depends on your interpretation at that point. Now, of course, we see it moved up. That's a bit easy, of course. Let's see. Just curious, but yeah, that was good analysis. I think it was good momentum here too. So we could see that momentum on the hourly chart, like this. Pretty good corrective pullback here. If we add the some oscillator, all right, you see momentum, no divergence, pull back to the zero line. Compare this upside here, right, to this correction. So it's easy to see it, right? It's easy to see what is momentum. It's easy to see what is correction. It is easy to see it when you see it. Look at the awesome oscillator and the power that is shown here. The price movement it made compared to this distance traveled and this distance traveled compared to here. Very easy to see it. So, Edith, if you still hear me, let me know. I'm curious. If not, no problem. You still did good analysis, by the way, so you'll catch it next time. No problem. All right, dollar CAD. All right, I'm going to skip this one. I don't think it's interesting. Euro pound, 1, 2, 3, 4, 5, sixth week. That's going to be interesting. Failure this week to break this high, and that pin bar could be double top, could be failure for the euro pound to break. We could see correction back down, and it could be a consolidation. All right, so is it going to fill? I don't know. At the moment, it's pushing up, so I'm not trading it either way here. All right, euro odd. Look like it's finding the break. This is an intraday break, so at the end of the day, we will find out if the break holds. If the close is near the low, that could be interesting for a short. Look maybe for a bit of a retracement. A fib, I think that would be a good way to do it. I think that they're looking for 38, 50 fib, and then for downside down to the bottom here. Stop loss should be okay above here, above the top. That's a trade using the daily candles. Thinking if there's anything to be traded right now. 4-hour candle is breaking as we speak. Not closed yet. There could be, even if it traces here, like this, the 38 fib, I think, could still be a bouncing spot. So even, let's say, wait, hang on. Like this, okay. So that basically trade idea on the daily chart, that still remains valid. But today, I think there could be still a pullback to the 38 fib. There's a supply-demand zone, a trend line. That could be a bouncing spot. We got a strong AO. What we will probably see is the AO go back to the zero line. Price make a correction up to the 38.2 fib. A turnaround at the 38.2 fib as this AO tops out at the zero line and starts to go down, back down. And I think there could be one more push within today from the 38 fib down to the minus 272 target. That's where today could end, and tomorrow's retracement could start of yesterday or today's basically bearish candle, daily candle, and then tomorrow there could be one more push. So something like this, for instance, I wouldn't be surprised if it happens. So shorts, two shorts probably at the resistance at that same fib might be in the cards or in the in the path of least resistance this week. All right. Pound is looking weaker, folks, than the euro at this moment. We're looking at the euro odd and looking at euro yen and pound yen. I'm really curious what's going to happen with this euro pound if it is double top at the end of this week. And if that's the case, the euro dollar might move a lot more than the pound, right? So that's going to be interesting. Anyhow, euro's bouncing as the trend line already kind of suggested. I was not interested in this long though, once again. Pound 2 broke the high. There's a lot of volatility though. Typically look at that. It's always like that, isn't it? Up, down. Always with London Open with pound. All right, back to this pound odd though. It is looking quite bearish. And if you're in that trade, great job. If you're not, I'm not sure if it's tradable at this point. I think it has moved so many pips already in one shot. I wouldn't know how to trade it at this point. It's close to the bottom as well. It doesn't have good reward to risk. This is the reward left on a daily chart. Difficult to put a stop loss. We could put it somewhere around one of these this candle high, maybe here. Still not a good balance there. I don't like it. It's moved a lot of momentum here. I would need to see at least some correction. I'm not sure which time frame, but at least let me put on a moving average here. $900 pip fall is huge on this hourly chart all the way from here without going back to the 144 EMA. I would need price to make a correction up to the 144 EMA. There's multiple divergences between these bottoms. It's a good channel, and it offered a lot of good shorts upon the break here, retracement here, even here. But now it is, I think, too much of divergence. So no, I wouldn't be interested. I need at least a pullback to 144 EMA. All right, let's see. Marianne is asking for S&P 500 analysis, and Kiwi is also being asked, and dollar CAD. All right, and a euro pound question. And Edith said that she unfortunately missed the odd USD. That's a pity, but those things can happen. We'll those things are always the risks of doing analysis, but sometimes not being able to monitor a setup, and sometimes a disadvantage of, let's say, market orders, right? And that's sometimes the benefit of a pending order. It's always a difficult equation because I like market orders myself, just because I can keep an eye on price and stuff like that. But yeah, there's always the risk of missing it. So let's take a look. First, euro pound. Let's just quickly take a look. Head and shoulders. Well, I guess so, but it's not it's more of a double top, I think, because this shoulder is substantially, well, at least a bit lower than the right shoulder here. So I would probably call it a double. If it turns here, it's more of a double top in my view. But yeah, that's basically something that I don't know at this moment. There's a bit of a wick here. I think it's too soon to say. If 2 days don't break this top, then no, it's not going to break probably. I think then this week's candle will probably turn into a bearish candle. Let's take a look at the S&P 500. All right. 1, 2, 3, 4, 5 weeks. We already have a substantial number of weeks not continuing with higher highs. We are basically bouncing off the previous support though. All right, so that could be a bouncing spot still, and it could provide enough momentum to continue. As long as price stays above this top and this trend line, I think that we're obviously in bullish territory. But the question is, can it break through this resistance? I would need to see a daily candle probably break above it before I think it's a continuation potential there. I'm not trading the S&P 500 anyhow, but that's what I analyze. It breaks this this top and it breaks this bottom and breaks the trend line, then I think there could be some correction. Now, in the long run, I'm not sure how much upside it has potential. Let's see how this monthly candle ends. If it closes bearish, I think that could be a retracement lower. I think it could be a bearish move down. If it closes with a wick like this, I think probably there could be a chance of a new higher high. But eventually, I think the divergence will play out, and there will be a bigger correction. But whether that's now or a few months from now, of course, that's a big and important question. Looking at this monthly candle will provide us some information. Look at these trend lines and looking at these support resistance will give us some information about that. Kiwi. I must have deleted it by accident. Let's find a quick one here. All right, there we go. Let me use a different template. Alrighty. So it looks like okay. So bit of background. Dogen is saying that it is short, or some of you are short, perhaps because of Nenet's analysis. It does look like a head and shoulders in the potential there. All right, there we go. Let's take a look at that. Obviously, this monthly candle is going to be interesting. We got bullish candles in a row. If this closes bearish, that's a good indication of weakness to come, I think. So that's a few days from now. That's going to be interesting. This week candle will have a lot of impact on that week, on that monthly candle. We got a couple of bearish candles already here, big wick, and this could easily be a retracement of that. And looking at that, it does look like a head and shoulders break with a strong break here, but it is pushing above that candle's high. Let's zoom in and see how the move up is happening. Quite impulsive at this point. I wouldn't touch it personally at this moment. Well, if you're trading a level, that's a level is a level, and you trade it as you trade it. You plan the trade and you trade the plan. So when I say I wouldn't touch it, that means that the way I trade, I wouldn't trade it. I'm not trying to discourage anyone here. Decisions are always yours. Risk involved are always yours. It is at the target, right? So that could be a very good bouncing spot. It is at fibs, so those are all supportive things. I'm just not a big fan of pending orders, and I'd rather wait for confirmations at the levels I look at, unless I'm very, very, very confident. But that's a pretty high bar there. So then I use pending orders. So I did not use a pending order here, and I probably will not, after thinking about it now very shortly, probably will not either. But if I see, depending on how these momentum bars handle themselves here, right? If I see some exhaustion in these candles and I see price making a pin bar here, for instance, that could be a signal. That's interesting. If it shows engulfing twins or some dojis and then suddenly a bearish candle, right? Or if it even more confirmation would be if it then shows 6 candles not breaking this top, then this swing high, swing low is over. That momentum has faded. Price has pushed up, and it's probably going to continue lower. Let me count the number of pips. 108. All right, so let me count where 144 is. Let's see, up in here. Yeah, basically looking at the number of pips, it's very much in a range. This is 144, which is the third level of the fib sequence that I use. Third level is very much in a range territory. Only when it breaks the third level can we expect more momentum. So from that point of view, it looks like it needs to break either the support or resistance before we can see some good continuation here. At this point, though, obviously there could still be resistance. I'm not saying, but be aware that we're definitely in range territory. So that's always a bit of it's not a momentum or trend territory. So got to really break probably a bit lower before we can expect a lot of momentum push. Yeah, ultimately, I think that we will see some exhaustion here, but I would rather wait for that to happen. I'm looking for candles, 4-hour candles, 1-hour candles, patterns up in here, and then it does look good for a hook back. And I wouldn't even be surprised if it breaks then this bottom, and then there could be a good move down to the fourth sequence, which is 233 pips, and then down to the fifth sequence, which is 377 pips. There could be some substantial move there. Of course, the invalidation, from my point of view, if it pushes through this, then something else is going on. In that case, I wouldn't go long, but I would be careful with shorts, right? It could still be, it's still hanging in and very close to resistance. If it breaks, I'm probably still cautious and still looking for some pullback before trading it to the upside. I might just sit on the sidelines, to be honest. And last but not least, which one was the last one? It was the dollar cat. Dollar cat, yeah, I'm not interested in. Sorry about that. I really don't like the dollar cat at this moment, but we can take a look at it. There we go. Big bearish engulfing twin. Let's see. I don't like this chart pattern. Right at resistance. Well, if anything, I guess it could be failure here to break. Sixth candle was bullish. 1, 2, 3, 4, 5. Sixth candle was bullish. So there is a higher high here. But will it break sustainably? I don't know. It could be a false break. In that case, I think 2 bearish candles would be indicating a double, triple top here on the daily chart. So this bearish engulfing twin, I don't think it could be a first signal. Yes, it is true. I'm not a big reversal trader though, so for me it's not enough for me to trade it. Although I can imagine reversal traders are probably very interested in it. For me, it's not enough. But if you use Joseph's method, we have a lower low. So from that point of view, yes, put a fib here, look for the 50 fib. I think that this is valid here. And it could be an ABC zigzag. All right, but as you also showed, as Joseph also showed, he has 36% losses. So, reversal trades have their risk. They have more losses than wins, but the reward to risk, if it's sufficient, you can still make a good profit, as Joseph showed with 110%. So this is, I think, does qualify as a setup from Joseph's perspective because we have a trend to the upside. As you can see on the hourly, we have a lower low on a 30, 40 minute, 30 and 1 hour chart, and the 50 fib would be his entry. The stop loss would be here, and he'll be looking for targets at these fibs. So, or maybe he has his own. He doesn't use these fibs, but you get the point. So Now, will it be an ABC zigzag? I think there's actually a pretty good chance for that, considering a golfing twin. But if it's a bigger downtrend, I don't know. I think that considering the daily chart, you could still easily get a correction like this, but a bouncing spot here, and still re-challenge the top here, and we can make some kind of ascending wedge. So I guess if the target is aiming at 131-ish, 130.50, it could be a safe target. All right, folks, so if you're interested in Josep's strategy, take a look at the YouTube channel that we will be uploading the webinar. All right, let me show you that. Joseph was showing his strategy in this one session, and he's available for follow-up questions. So take a look, take the opportunity to capitalize on his, on his knowledge, on his method, on the system, and a lot is explained in that webinar. But perhaps you have a follow-up question or so, then Joseph is available. But if you want more follow-up, then we have this bonus package for you. It's available to the end of October. If you set up a new live account, you get, depending on the capital, you get all these extra goodies. It's the best package, very wide package, and yeah, it's we think covers almost all of it. So take a look at that. If you're not sure, you can always open a demo, and then you can extend this this package by 3 months. It's valid to the end of October, but if you open a demo, it will be valid till the end of January next year. So take a look at that. That's this link here to find out more information. And if you're interested in basically, all right, finding out the webinar, just looking at the webinar, you can go to our channel here, Elite Currency, right there. All right, and we'll be uploading it very soon. All right, so thanks so much for joining this webinar. We'll be back tomorrow with strategy. Let me show you, we'll be back tomorrow with strategy webinar. Nenad will have his expert opinion tomorrow as well. Tomorrow evening, we'll look at losing trades and drawdowns. And Thursday, we take a look how to start when you start trading, the first steps. But even if you're trading 1 or 2 years, it might be good to take a look at this just in case you maybe skip some steps or you don't look at them as thoroughly. If you've been trading already for 3+ years, then probably this one does not make much sense, I guess. But if you still want to join, by all means, of course, we would love to have you there. And just for the fun of it, in the background perhaps, of course, we would definitely appreciate if you're there. So hope to see you in these webinars. Wish you good trading, of course, above all, and see you soon. Cheers.